In this video we will be doing planning and operational variance questions. Okay, so first question is, which of the following statement are true regarding the material price planning variance? Okay, so before moving to the question in the detail, I will show the chart for regarding the all the variances regarding the materials, and it will be easy to mug up the formula and use in the exam. So I hope it will be benefit for you to go through the chart. Okay, so first of all I will write down SP into SQ, and I will keep a heading A and leave a one gap. So C, SP into AQ, then AP into AQ, and its heading will be D. Okay, so now difference of these first and A and C. A and C will be our material uses variance, and again C and D, it will be our material price variance. Okay, let's just keep the is E. Okay, D will be here. I will add one more later on. Okay, okay, so what I told, materials uses variance. Okay, and how we will get that? By subtracting A minus C, means A is our SP into SQ minus SP into AQ, and what's the common between these two? SP is common, so we will take it out, and remaining is SQ minus AQ. Okay, then material price variance. Okay, and how we will get that? Subtracting C minus E, means SP means middle one, SP into AQ, and the last one is AP into AQ. And what's the common between these two? AQ is common, we will take it out, and remaining will be SP minus AP. Okay, so now we can classify this material into subheading. For the material uses variance, it can be classified as a material uses planning variance, material uses operational variance. Okay, and similarly for the price also we can calculate that. So what I told, material first, material uses planning variance, and material uses operational variance. Okay, and how we will get that, I will show you. Just wait and watch the video till last. Okay, so material price planning variance, right, and material price operational variances. Okay, okay. So now I will show you how to calculate this. First, okay, let me extend this one. Okay, so now I will make a few changes. Okay, first I will write on SP into revised standard quantity, and here I will write down revised standard price into AQ. अब इसको याद करने के लिए what you have to do is, what is the difference between these two? Is our price variance, so it means we have to revise our standard price. And what is the difference between the first and third? It's a uses variance, so what we have to revise? We have to revise standard quantity. Okay, I hope up to this it is clear. So now how to get the material uses planning variance? By subtracting A minus B. So SP into SQ minus SP into RSQ, and what's the common between these two? SP is common, we will take it out, and remaining is SQ minus revised standard quantity. Okay, and similarly for the uses operational variance. Oh, spelling I have written wrong. Operational. Okay, so if we will subtract B minus C, and what is that? SP into RSQ minus SP into AQ, and what's the common between these two? SP is common, if we will take it out, remaining will be RSQ minus AQ, so we will get our material uses operational variance. Similarly, for the material price variance, if we will subtract C minus D, and what is that? C is our SP into AQ minus RSP into AQ. So what's the common between these two? AQ is common, we will take it out, and remaining will be SP minus RSP. So this is the material price planning variance. And again, for the material price operational variance, if we will subtract D minus E, we will get SP into RSP into AQ minus AP into AQ. And what's the common between these two? AQ is common, we will take it out, and the remaining will be RSP minus AP. And this is what our material price operation variance is. Now you can match this formula with the textbook, with reference to textbooks. Wait, I will check it out. So I think this chart will be benefited for you to mug up the formula. Otherwise there are lots of formula, you can't just remember all at once. So okay, so I hope this chart will be beneficial for you. So now coming to the question, what's the question is, which of the following statement are true regarding the material price planning variances? Okay, so the publication of material price planning variance should always lead to what is okay, so the publication of material price variance should always lead to automatic updates of a standard cost. What the question is telling, the publication of material price variance should always lead to the automatic update of a standard cost. So be careful with the word always, this will be dangerous. So it will not always lead to the automatic update of a standard cost, there must be a good reason. Okay, it should not be realistic. I mean, it should there should be a good reason for deciding that the original standard are unrealistic. We can't just suddenly change out the figure. Okay, so it should not be always. Second is, causes of material price planning variance do not need to investigate by the manager at the or at any level in the organization. See, any kind of planning variance, whether it's material, labor, or sales, is beyond the control of the manager. Okay, so we can't assess the performance of the manager based on the planning variance. So their performance should be assessed on the basis of a operational variance. It means these are the factors which are under the control of the manager. Okay, so it need to be yeah, so their performance should need to be assessed on the basis of a operational variance. So but those, if those variants are frequent, that should be investigated by the senior management. Okay, so this statement is also false. Okay, so neither one and neither two. Moving ahead, what is the level of actual sales? Okay, so question is, uh, Leaf Limited has a mixed year and the market share has improved 2% to 20%, but the overall market has contracted by 5% in the same period. The budgeted sales were 504,000 and the standard contribution was 12 per unit. What is the level of actual sales? So one thing you have to remember is, in case of the question told market share, in that case it's a operation sales operational variance. Okay, again I'm repeating, if the question told you market shares and market size, in that case, yeah, if the question told you market shares, it's our operational variance. Okay, and if the question told you market size, then it's our planning variance. Okay, so here what we have to do is, the question told, okay, the question number is 198. Okay, so question told the market share has improved 2% to 20%. It means earlier it was 18%, now it has been improved to 20%. Okay, but the overall market has been contracted by 5%. Okay, so overall whatever the market size is currently, it has been contracted by 5%. Okay, so the budgeted sales were 504,000. So what's the budgeted sales? Budgeted sales is 504,000. So if suppose if the market size is x, if the total market size, if total market size is if the total market size is x, so and this budgeted sale is x into 18%, right? X into 80%, which give us a 504,000, right? So what the value of x? It's simple a algebraic, so we can calculate by dividing it by 18%. So overall our current market size is 280, what is that, 2800,000. Okay, so now question told market has been contracted by 5%. Okay, so market size after contraction, after contraction, and it's contracted by 5%, means 100 minus 5%, so 95%. So it means current market size after contraction is to 2660,000. Okay, okay, so question asks the actual sales. Okay, okay, so now after contraction the market size is to 2660,000, and market share has been improved, means we have budgeted 18%, but we actually means achieve 20%. So 20% will be based on this market size after contraction one. So our actual sales equal to 20% of this. Okay, so 532,000 will be our actual sales. So I am again repeating, question told the market share has been improved to 20%, and by how much? By 2%. Means earlier it was 18%, now it has been 20%. And so budgeted sales value has been given. So this budgeted sales is 18% of the total market size, and we don't know what's the total market size, so I suppose x. Okay, so x of 18% equal to the budgeted sales value, and so I got the value of x by solving these equations, and I got that 2800,000. Okay, but the question told in the same period market has been contracted by 5%, so means this value should be reduced by 5%, so I got 2660,000. Okay, so now after the contraction market size is this, but we have achieved 20%, so this 20% into this will be our actual sales. So looking at the option, last seems to be feasible, and by how much percentage the question is asking. So for percentage, now we have achieved 532,000, and earlier it was 504. So based on the previous figure, our percentage will be this. Okay. Okay, so next question. Okay, the question is same, but the requirement has been changed. What is the sales market size variance? Okay, the for sales market size variance, again I will make a chart like I have been done for the materials. So now for sales we will make a same chart. Okay, but the denomination will be different. Okay, the question is your 199. Okay, and the for sales I'm making this chart. First of all, actual selling price into actual quantity sold. Okay, and then actual quantity sold. Let me put this, extend this. Okay. Then this one is for the price, so revise selling price into actual quantity sold, and revise budgeted selling price, then budgeted selling price into actual quantity sold. Then comes the actual quantity sold into the STD, then revise budgeted quantity sold into STD, then BQ sold into STD. So I will explain one by one what I am writing. Okay. Okay. So see, this will be A, again A, B, C, D, E, F. Okay. So now the difference of A and C. Okay, so difference of A and C, we called it as a sales price variances. Okay, what I told, difference of A minus C. And what is our A? A is ASP minus okay, so minus C. C is our BSQ minus AQ, and taking out the common between these two, which is AQ, we will get actual selling price minus budgeted selling price. So this is our sales price variance. Again, okay, now sales volume variance. Okay, by subtracting D minus E, we will get the sales volume variance, and D is our AQ into ST minus D, or not E, is F, sorry, it's my fault, it will be F. Okay, so what's the common between these two? STD. STD means it will be either standard margin or standard contribution, depends on the what the system question has been told, whether it is marginal or absorption costing system. In case of marginal costing system, it will be the contribution, standard contribution per unit. In case of absorption costing system, it will be standard profit per unit. Okay, so AQ minus BQ. Okay. And again we can classify this variance into the sales price planning variance and operational variance. Okay, so for planning I will write in the shortcut. Okay, and operational, again planning and operational for the sales volume variance. Okay, okay, so difference of first A minus B. A minus B means ASP into AQ minus B. B is RSP into AQ, and you can just take out common. What is common in this between two? AQ, ASP minus RBSP. Okay, so this will be our planning variance. Now you can do same for the volume variance for the plan. Okay, no, it will be operational variance, it's my fault. Oh, planning variance will be B minus C. Okay, and plan sales volume plan sales volume planning variance will be operational will be D minus E, and planning will be E minus F. E minus F means these two difference will be our planning, and these two difference will be our operational for the volume cases. Okay, so this is what the chart for the sales looks like. Okay, okay, so now coming to the question, what the question told, to calculate sales market size variance. And sales market size and planning, it will arise in the volume, and market size mean it's a planning, and market share means it's a operational variance. Okay, so now question told to calculate a market size, which is also known as a planning, and planning is E minus F. And what's the E? E minus F. And E is this minus F, and F is this. Okay, so taking out common, what is the common between these two? STD, standard is common, standard margin is common. Okay, so RBQ minus BQ. Okay, so looking in the question, and we will find out this value. Okay, so market question is same as the verb. So now, and the standard contribution has been given. It means company is following a marginal costing system. Contribution per unit is 12. Okay, and what we need, a BQ is also known, which is 504,000. Now we need a revised budgeted quantity. So now this is the tricky part. As the company has budgeted the its I mean sales value 18% of the market size, and now market has been contracted by 5%, so 18%. Now the revised budgeted quantity will be 18% of the revised market share, which we have calculated above, which is 226,60,000. So now revised budgeted quantity will be 47,880. Okay, so now putting in this formula, standard is 12 and revised budgeted quantity is 47,880 minus this. Okay, so we got our sales market size variance, which is 300 to 400 adverse. Negative means adverse. Okay. Okay, I hope this is clear to you. In case of any confusion, just stop the video and do the revision of the previous part. Okay, coming to the next question, what is the market share variance for the clinical machines? So now question is asking market share variance. Market share variance means sales volume operational variance. Okay, so don't get confused in these terms. Okay, so question is 200, right? So now market share variance, and how can we get that? It will be the difference of D and E. And what's the D and what's the E in our chart? D is AQ into STD, and E is okay. So now taking out the common between these two, STD is common, so AQ minus revised budgeted quantity, we will get our value. So now what the STD and what's the AQ, let's read out the question, we will get to know. A company manufactures a special clinical machine used in the hospital, and company hold a 2% of shares of the market. Means currently company is holding a 2% shares of the market, and total market demand has been constant, means it's 250,000 machines for last few years, and budgeted selling price for each machine is 10,000. And the standard contribution is equivalent to 10% of the budgeted selling price. So we got to know a standard contribution, and there is nothing mentioned the which system company is following, whether it's marginal costing or absorption costing system. So we will simply take this contribution and selling price is 10,000. So contribution is 1,000. Now we need AQ and revised budgeted quantity. Okay, so AQ. Now initial performance of review of company actual results show that sales volume is 5600 machines. So AQ is 5600, and the total market demand for the machine though has risen to 300,000 units. So remember, the company has budgeted 2% share of the market. The budgeted sales is 2% of the sales of the market, and the sale of the market is 250,000. Now it has been revised. Now it has been risen to 300,000 units. So it means still 2%, but of the new market shares, that is 300 market size. I mean 300,000. Okay, so now putting into the formula, we will get the value 1000 into AQ. AQ means 5600 minus 6000. So negative, it means adverse. Okay, so B. Okay, so next question. Now the question is asking for the material operational price variance. Okay, we have already calculated the formula above. Material operational price variance. So question number is 201. Okay, so taking out the common between these two. Oh, I have already been taken out. Okay, so what we need AQ, RSP, then AP. Plasmas company use recycled plastic to manufacture the shopping plastic for local retailers, and the standard price for recycled plastic is 0 point per kg. Means standard price means it before revise. This was a revised selling price, na, revised standard price, but this was the previous one, not the revised. So previous it was 0.5 per kg. Standard uses of the recycled plastic is 0.2 kg of each material, so each basket, I mean, and the budgeted production was 80,000 baskets. So this is not relevant. Due to the recent government incentive to the encourage recycling, the standard price of recycled plastic was expected to reduce to 0.40 per kg. So this one is our standard revised standard price, which is 0.40. Earlier it was 0.50, but due to the government incentive to encourage recycling, it has been reduced to 0.40. So what we need is actual price and the actual quantity. The actual price paid by company was 0.42. So actual price is 0.42, and the 100,000 basket were manufactured using 20,000 kg of recycled plastic. Means actual unit produced was 100,000, and by using the, what's the quantity of the recycled plastic used, actually it was 20,000. So putting this all these things in the formula, we will get actual quantity is 20,000 into revise is selling standard price is 0.4 and actually 0.42. It's negative 400, means adverse. Okay, okay, now next question. Okay, so next question is asked, after adjusting for the external factor outside the manager control, in which category is there evidence of poor performance? Okay, okay, so basically we can solve this question like just using our little bit knowledge. Like, we can't assess the performance of the manager on the basis of the planning variance, right? Because these are the factors which are external factor which are beyond the control of the manager. We will only assess the performance of the manager based on the factor which are there under control. Okay, so even though we are adjust the external factor, it's like a planning variance and which are beyond the control of the manager. So we won't assess the performance whether it's poor or good, but looking at this category, sales volume increase or decrease based on the like certain factor, like customer might have been changed their preference or competitor might have been arrived, but the reason have been given here. So sales volume and sales revenue are those like something beyond the control of the manager. Only the things has been controlled in the material cost, because we have to plan how much material we have to use, which kind of material we have to use. So looking at this option, so we can easily classify the material cost will be the only like mm, evidence for the poor performance, but we will go in the details for make it sure. Okay, so question is your 202. Okay, so false is sales volume, right? And for sales volume we can classify the variance into planning and operational. I haven't shown the chart above, just go review the video once. SQ sold into STD, then revise budgeted quantity sold into STD, and then after that it's comes a budgeted quantity sold into the STD. Okay, so now actual quantity sold this year is 300, right? And we don't know about the standards, let's suppose X. Okay, and revise budgeted quantity. The question, the market expert notes say the profit center manager claimed that the poor performance of her division is entirely due to the factor outside her control. She has submitted the following table along the notes from the market expert, which she believes explain the causes of the poor performance. Okay, the for sales volume, the market expert notice entire market has been decreased by 25% compared to the last year product, and which will be obsolete in the 4 years. Okay, so entire market has been decreased by 25% compared to last year, means last year sales was 40%. So revised budgeted quantity for this year will be, because market has been fallen by 25%. Oh, what I did, divide. So 400 into 1 minus 0.25. So how much you need? 300 is our revised budgeted quantity, right? So 300 into X. We have supposed the standard margin or contribution, whatever the thing is, we supposed to be X. Okay, now budgeted quantity was 500, and again we don't know the standard margin. So now as I told earlier, the difference between these two is our planning variance, right? Yes, so difference between these two is our planning variance. So we can't assess the performance of the manager based on this factor. So we will only look into these two things, which is operational variance, right, which is under the control of the manager. And just have a look on this formula. If we will take out the common, STD will be common, and the remaining thing will be our AQ minus RBQ, and both are same. In that case it means it will be 0. So overall there is no variances and the manager has performed well, right? Okay, similarly for the this one is for the sales volume. sales volume आई होप आप लोगों को समझ में आई हो। मेरा जस्ट मैं क्या कहना चाहती हूँ कि अगर यहाँ पे हम लोग फॉर्मूला में एस टी डी को कॉमन ले लें तो हमारे पास बच जाएगा 300 एंड 300, एंड इफ वी विल सब्ट्रैक्ट बोथ दिस वी विल गेट द 0। सो ओवरऑल वेरिएंस क्या हो जाएगा? 0, है ना? एक्स का कोई मतलब ही नहीं रहता। नाउ नेक्स्ट क्या हमारा? सेल्स रेवेन्यू। सेल्स रेवेन्यू एंड इसके लिए हम लोग प्राइस को एज्यूम करते हैं, तो प्राइस कैलकुलेट करना पड़ेगा। एंड प्राइस वाले में व्हाट्स आवर फॉर्मेट वाज actual selling price into AQ, then revised budgeted selling price into AQ, then budgeted selling price into AQ. I think this was our format. So actual selling price we can calculate, अब कैसे, what is the actual sales, 128,500 and we know the quantity 300, so actual selling price will be 95. ठीक है, so actual selling price is 95. So 95 into actual quantity sold. ठीक है, and what's our budgeted selling price, just hold on second, we will come back to the here. And budgeted selling price will be our 50,000 divided by 500, right? So how much, 50,000 divided by 500, 100, so 100 into AQ. I hope यहाँ तक clear हो. So now budgeted selling price. So market expert note says rarely in the market search selling price fall by 10%, means 10% से fall हो रहा है price. So 100 का 90% लेते हैं, so now it will be 90. Revised selling price will be 90 because the rivalry competitor has reduced its price by 10%. So now revised budgeted selling price will be 100 into 90%. Okay, so we will got the 90, so 90 into actual quantity. So again, difference between these two is operational variance and difference between these two is our planning variance. So we can't assess the performance of the manager based on the planning variance, so we will omit this part, we won't require, so we will only see these things. Okay, so actual quantity sold was 300. Okay, so now 95 minus 90 into AQ, and we know the what the AQ is, it's 300 been sold by the company which is given above in the sales volume 300. So what's the variance, 1500, and it's favorable, so it means manager has performed well in this area as well. So now coming to the part of material cost. Okay, so now material cost, for material cost again we will question what the market experts is selling. As demand for the raw material is decreasing, supplier lowered their price by 5%. So again we will see the material price variance by subclassifying it into the planning and operation. And so SP into AQ and revised selling price into AQ, then AP into AQ. This is as per our format, you can see above, or you feel you can mug up the formula, no issue, you can go in that way as well. Okay, so I feel easy going through the chart, so I used to do this calculation using the chart. So what is the selling price? So selling price was we need to calculate. Okay, so again the difference between these two is planning and these two is operation, so we can easily omit this part. Now we will do calculation for this. So actual quantity sold we know it's 300, right? So we will put this value into 300, and actual selling price we also have been calculated above. Actual selling price was 95, you can see here we have been calculated above 95. So okay, and now revised selling price. So revised selling price says as the demand for the raw material is decreasing, supplier lowered their price by 5%. Okay, so now how much unit we have been sold, 300, so dividing this we will get 6500 divided by 6500 divided by 300. So this is the selling price and it should be lowered, just hold a second. Okay, And now supplier has lowered their price by 5%, means 95% of this we will get 20. No, this just a bit. Oh, it's my fault. I told the actual selling price, I mean selling price of the sales value I have taken, so that will not be the case. Here we need to calculate. So how many what is our actual selling material cost is 6500, and for what unit? For 300 unit. So this will be our actual price of the materials. Okay, and again coming to the back to the here, revised selling price will be, first of all, what is our selling price for the material? Okay, so actually I'm getting with confused with the word. So this is our standard price. So what is the standard price for the first of all we need to know what is the standard price of the material, right? So standard price is 10,000 divided by for 500 unit, right? So standard price was 20. And what is the actual price? Actual price we can get 6500 divided by 300. Okay, so it's 21.667. Okay, up to here I hope you guys are clear. So now supplier has lowered the price by 5%. It means 20 into 95%. So our revised selling price will be 19. Revised selling price, again I'm telling, I mean revised standard price. Revised standard price will be 19. Okay, so forgive me if in case I have used the word selling price for the material for SP. It's actually a standard price. Okay. Oh, okay. So now delete. So revised standard price is 19 into 300, and here will be 21.67 into 300. So now what we are calculating? Operational price variance for material. Operational price variance. Okay, so now difference of these two, multiply it by quantity 300. So it's negative, means manager had not performed well in the case of material because it's adverse. Okay, so now hope you this question is clear to you. Minus this into 300. Yeah, sorry, it's 800 adverse. I have just taken mistakenly 20 instead of 21.67. Okay, so moving ahead to the next question. Which of the following statement is are true regarding planning and operational variances? Planning and operational variances are calculated when it is necessary to assist the manager on results that are within his or her control. Yes, I told earlier, we calculate these variance in order to see whether what factors are under their control and what factors are not under their control to assess their performance. Okay. Second, revised standards are required because variance may rise partly due to an unrealistic budget and not solely due to operational factor. Obviously, this is correct. So unrealistic budget not only solely arise due to the operational factors. Okay, so we need to revise this. We need a revised standard. Okay, so this both is correct. Okay, so in next video we will do next question. Okay.